We are in a big shift of times right now where the question that you asked me for the first time in many years is starting to change. It was in the past that loans, lines of credit, credit cards, collections, public records made it onto your credit report. And that's really what factored into the score. And that's what factored into your approval likelihoods. We're starting to see even more lenders utilizing some financial tech companies like there's one called Plaid, which is basically if you're applying for a loan, you put in some information. It's pretty safe. I'm actually a fan of the process, so it might sound like I'm speaking down to it, but I'm actually a fan of the process. But
Okay.
you put in some banking information. It's very safe. It's secure, and they provide a read-only access to people's bank account, which it's really helping a lot of under credit utilized consumers get access to money when their credit report on its own isn't enough. So that's a new thing that's starting to shift. That's changing the environment of loan approvals.
So lenders through this AI technology or whatever is driving it, is it AI? I would assume.
It's got some AI built into it, yeah, through the approval process. But
So they have access to your banking account. Did I understand that correctly?
in a sense, yes. I do want to be super clear on the concept of read only. So they
Okay.
can't take any actions. They can't, like transfer monies and do anything like that. All they can do is these fintech services are allowing them to take a view into a person's bank account. And let me tell you who this is. It's great for some people. It's, not as much of a deal for other people. But there were people who, through 2008 and 9, possibly took some hits. They swore off credit for a while. They said, "I'm not going to do it," and they make good money. They've got good revenue to, the good income. They're doing okay, but they've never rebuilt that credit profile.
Correct.
And when they are working with these new companies or excuse me, previous companies, they would apply for something and the company would say, "You don't have the credit, so decline."
Correct.
Now we're seeing some companies that are stepping in and going, "Hey, you don't really have the credit, but do you mind if we take a peek at your bank account?" And it's all, with permission. You'd have to give permission and authorize that. But they look in and they look for things like regular deposits. They look at like average daily balance. Do you pay your bills every month out of there? And they see those sorts of things, and it's something that's becoming more and more popular.
Yeah.
In Go ahead.
Now, what is driving the change? Is it a law that was passed, or is it the technology, or is it the fact that there's this demand?
Are you open to an opinion?
Yes.
Okay. In my opinion, it's market and demand and what I believe to be the manipulation ability of credit reports through things like credit repair, through things like these people that sell trade lines and they sell all these ways. Credit reports used to be much more difficult to manipulate than they had become. Credit repair companies, which, and look who's talking. I own one, creditnerds.com. That's my credit repair company.
Correct.
Um, but we were able to do some manipulation of credit reports through, removing certain things, adding certain things, and finance, lenders catch on to stuff, and they're starting to lean over and go, well, it's a lot harder to manipulate the average daily balance in your bank account. It's a lot harder to manipulate whether your cell phone bill comes out every month of your bank account. It's very difficult to manipulate your bank account uh, as it is to manipulate your credit report and credit score. So we're starting to see a shift. Now, this isn't huge. It's not really big right now, but my belief and my prediction is that over the next 2 to 3 years, we're going to start seeing it a lot more.
That's interesting.
Yeah.
Now, that's really fascinating. So now, what kind of things should we be trying to remove off of our credit reports?
So right now, my big push is for everybody still focusing on your personal credit. The first question you asked just sparked this because that has changed so recently. So I wanted to make sure that people are aware of it. But do keep in mind that's a small percentage of lenders. Most lenders are still focused very heavily on your personal credit report
Now, I wanted
in
to
that sense.
clarify this peek into your finances. This is for personal credit or business credit, or it's both
Yeah,
happening?
both. Yeah,
Okay.
both. Yep. So I found a company that was doing this, and I was found it very interesting. And so I went through the company myself. I applied with this company. They didn't ask me to pull my credit report. They didn't ask me for anything like that. All they asked me for was to connect this service to my bank account. This was a while back, but and I found it very interesting. I said, I'm curious about how that works. Okay, I did it, and they approved my line of credit without a single credit report, without pulling any personal credit, and they based it solely off of, and I'm very, I am financially blessed. So I want to throw that out there. I've got, good bank accounts, good income, all of those things. So my bank accounts, if somebody see it, they're like, okay, yeah, that's somebody we want to work with. And they approved it based solely off of that information. And that's something newer that we're seeing in the lending market is, alternative methods of approvals.
I like that because it includes people
Hmm.
that are worthy of credit, but because they messed up, whether it's a divorce or a financial crisis,
Yep.
they messed up their credit report, they now have eligibility to do
Yeah.
business.
So something that's really the changes that have been happening in personal credit over the last year have been very consumer focused and consumer friendly. Um, uh, Fannie and Freddie announced that they were opening up to new score models. The score that's used for a mortgage right now is nearly 30 years old. The models came out a long time ago, 25, 30 years ago. And that same score was still being used, and it's just outdated. We've got better technology, better predictive models now that include more American consumers. And Fannie and Freddie finally opened up and said, all right, we're going to start accepting some of these newer credit scoring models. And I mean, you're talking tens of millions of American consumers that would qualify for a mortgage that previously would not have.